It has been one of the most speculated stocks in the Nasdaq over the recent years. Some have said that it might be the next Tesla. Most people believe that it might do well now, but it's eventually going to burst. Regardless, this is one of the most speculated stocks in the stock market in the recent years. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies actually having a product. As time went on, the stock's price action, along with the investors' hype and hopes, went through some huge roller coasters, and some are still wondering if it's time to jump in this bandwagon. In today's video, we will look at Lucid and to see if the company still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Lucid recently experienced a very significant surge, soaring over 6% during Monday's trading session. But as the day progressed, a group of sellers suddenly emerged, causing the stock to retreat approximately by 4% from the peak. This decline coincided with the anticipation surrounding the release of CPI, Consumer Price Index, scheduled for Wednesday. Over the past few weeks, Lucid exhibited an upward trend, or at least a tendency of doing so, with an impressive 40% surge since June of 23rd. The stock has been trading within the confines of an ascending channel pattern, which has two parallel trend lines. Now, this pattern suggests that the short-term bullish outlook would remain, but we also have to be careful about the potential of a future bearish turn too. For the bullish traders, it's very advisable to align with the prevailing trend until the sign of the reversal. A viable strategy may be to purchase the stock when it reaches the lower trend line and to exit when it approaches the upper one. As for the bearish traders, they need to monitor closely the stock for a potential breakdown below the lower ascending trend line with high trading volume. Such a breakdown from an ascending channel typically serves as a robust reversal signal, which indicates a substantial downtrend on the horizon. Now, it's quite obvious that Lucid has come close to reaching the top rising trend line of the channel pattern before encountering some resistance. And following this rejection, Lucid tested the lower ascending trend line and then experienced a rebound. The closing price of Lucid will also determine the formation of two critical candlestick patterns. So, if the stock closes near the opening price, the candlestick will then materialize, which will suggest a potential local top and the likelihood of retracement on Tuesday. Now, in my opinion, unless there are significant fundamental events happening to either the EV sector, the stock market at large, or the stock in particular, we're probably going to see a continuation on Tuesday as far as Lucid's upward momentum is concerned. So, I believe that the resistance would be around $8.50 to $10, and the support is around $7.50, and the lower one could be around $6. So these are the current price action patterns and the outlook for it. Now, let's also take a look at the technicals of Lucid. The trading volume of Lucid has recently been 66 million shares versus an average volume of 57 million shares. Over the past 52 weeks, the price fluctuated between $5.46 and $21.78. The volume of shares traded tells us how many shares are bought and sold at any point in time, and whether the liquidity is enough to support a trading strategy. With a thin float, it's going to be easy to influence the stock price, but also hard to exit. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. It's not the case for the time being, as not only there isn't that much of a difference between 66 and 57, I would say that this is barely enough for continuation. It's probably not going to go for a breakthrough, but also probably not for a reversal. The market cap of Lucid is currently $13.6 billion versus the enterprise value of just $12 billion. As we compare the current price to the historical price fluctuations, the stock is 45% higher than the 1-month low, 45% higher than the 3-month low, and 45% higher than the 52 weeks low. On the options market, which often gives us a hint about what the sentiment is, the implied volatility is at 93% versus the historical volatility of around 83%. The put-call volume ratio is currently at 0.31, and it's normal for many stocks to have a higher put volume than what they truly deserve. In other words, most people currently believe that Lucid will go higher. So, in terms of volume, the current volume of options traded is around 238,000 contracts a day versus the 30-day average of 171,000. In terms of open interest, the most recent volume of open interest is 1.1 million contracts versus the 30-day average of 1.1 million contracts as well. Regarding the shareholder structure, institutional shareholders currently own 73% of the total float. This means that institutions mostly own Mullen, and this is a good news for people who want to invest in the stock in the long term. So, the current short interest is around 24% of the total float, 50% of which coming from the dark pools. Usually, if the short interest is above 15%, there could be a case about concerted short operations going on with institutional shareholders or institutional players. I believe that there is such a phenomenon right now, but if we think about it, there is a significant degree of shorting across the board as far as EV stocks and NASDAQ titles are concerned. Lucid Motors, trading under the ticker symbol LCID, is an electric vehicle manufacturer that has been in operations for more than a decade, with a solid presence in the United States, along with world-class technology and designs. As one of the more mature companies in a burgeoning industry, Lucid is often heads and shoulders above other EV startups. One of the major differentiators of Lucid compared to its competitors is the fact that Lucid has a model rolled out, currently being sold and collecting cash from people. It is no longer just a distant promise that there might be an actual finished product coming out hopefully over the next 5 years. Lucid Air is a high-end EV sedan that they have been selling for some time now, and so far it has been having a decent feedback. Of course, nothing is perfect, and Lucid is by no means an exception. It has been having some quality control issues, and just like the rest of the industry, parts are sometimes hard to come by due to a variety of reasons. Another potential reason is that Lucid has a limited presence in the autonomous driving, and this has certainly caused some issues with the long-term growth potentials, because the quality of the battery and the design may not be sufficient to differentiate in the long run, and this may cause some issues down the line. Can that be different a few years down the road? I mean, of course, but it'll probably require some additional funds allocations in research and development. At a time when there is increasingly tight capital availability for growth and startup companies as well. The third one is more psychological, but it is probably one of the things that will linger in people's mind for the foreseeable future every time they hear about the word Lucid. Many people will remember that Lucid, also called CCIV back then, as a company that eventually caused the end of the EV bubble, with equity value in the freefall starting from early 2021. The market is largely a self-fulfilling prophecy regarding price action, and in that case, the expectation of a party that may end has already been lingering in people's mind even before the bust. This is why taking the previous levels, it might be something that people are tempted to, but it's also their limits, because as soon as the limits are reached, people are going to liquidate their positions, fearing that it's not going to go beyond the previous heights. Obviously, the past doesn't predict the future, and the EV sector altogether is still a young industry with plenty of growth potentials. What I'm trying to do here is to paint a picture about where the company came from and what could explain the current dynamics. From a long-term perspective, the relevance of Lucid is directly dependent on the potentials of the industry itself, as well as the trends that will occur within the automobile sector at large. We know that within a decade, many countries would start to limit or even forbid the sales of new combustible engine vehicles. And that, of course, may affect the price of many alternative transports that will become maybe more affordable and more readily available. The biggest factor to look at here over the next few decades would be the technological advances for both the electric vehicles but also other kinds of transportation solutions. For example, how likely are rare earth going to be recycled more often, the fuel cell technologies to become a reality, and the urban development to allow alternative methods of transportations like tramways, metros, and trains to be more widely used. At the moment, it seems like the electric vehicles are going to have an important role in this new economy, but for how long would this assertion remain accurate? Another aspect to consider is the possible change in the market participants' collective psyche of how to evaluate the market cap of EV companies. The reason why this sector is so popular is because the market cap differs very much to the ones of traditional auto manufacturers, is because by and large, the EV companies are valued as tech companies, with the assumption that they have a much higher degree of sophistication and more emphasis on research and development. Of course, some companies do indeed spend a lot of money on these. Many more are just doing Lego work though, assembling batteries, chassis, and wheels on which they have like little to no proprietary technologies and simply put their logo in order to upsell. There's indeed some concerns about how long will these assumptions last, that the EV manufacturers are much more just manufacturing companies and not tech companies. So I think that the answer might surprise many in the years to come. I'm not saying that this will happen for sure, but the likelihood is material enough for people to consider this as a risk factor. In terms of fundamentals, Lucid has been able to prove to the market that their product is popular enough and that the company has a decent production capacity to satisfy customers' demand to a point. With that being said, they have a scale problem, and to generate profit, or to just have gross profit, Lucid has announced in the past that they need to increase the production significantly in order to amortize the fixed costs. This kind of concerns is compounded by the fact that global economy is likely to slow down over the next couple of years. If the production capacity is expanded now, they could have lower inventory and capital turnover, increasing the collection cycle and to become more financially vulnerable. If they don't increase the production now, there could be widespread market skepticism on Lucid's management and ultimately reflect on Lucid's share price. Despite all this, Lucid remains one of the more promising and substantial EV manufacturers in this burgeoning and volatile sector, with real products rolled out and actual customers willing to buy their cars. What this means is that the business model is proven to be mostly valid, and the rest is a question of scale, patience, and entry point. Given the current price action, the fact that most shares are owned by institutional shareholders, my recommendation is to keep the emphasis on long-term holding instead of short-term trading. Now, considering the recent performance of Lucid and the info that we have, here is my recommendation. If you're already holding Lucid shares, it's a smart move to keep a close eye on the company's updates. Like, look out for news about the demand for Lucid Air, how their gross margins is shaping up, and keep an ear out for any sort of news regarding Gravity SUV. That's probably gonna come out around 2024, so next year. Those updates will give insights about how things are gonna go and like whether the stock price is gonna benefit from those events. If you're in it for the long haul and you believe that Lucid is gonna go to places, then it's gonna be very smart to hold on your current shares and don't sell. Now, if you don't have any sort of existing positions in Lucid shares, but you're thinking about jumping in, then I would say that the current price is a good price, but it would also be more interesting if you can like check whether there will be more retracements down the line. Because remember, the lower your average cost is, the more sustainable it can be for your overall portfolio's health, right? So in that sense, I would highly recommend you to only buy a small chunk now and to save the allocation for later in case it further dips. And I would recommend to commit between 3 to 5% of your portfolio in Lucid shares.